Okay, it's 5:08 p.m. on Wednesday, August 3rd, 2022. Welcome. This is Fari Emzi. Very, very quickly, I don't want to get into too much of a uh, uh, house-cleaning stuff because we had one of these Sunday. It was posted. First of all of these are being recorded. As you know, I can't do one-on-one questions because we're a newsletter writer. It'll expose me to too much liability. I don't have full First Amendment rights like you guys do. You can ask. You can ask the question. I just can't answer it unless it's in this forum or it's in a chat room. Okay, so either a live chat room or in a webinar, and others have to be around and it has to be recorded to protect you and protect me. When these are done, we always post them. Usually depends how busy we are, but usually within an hour it gets posted. It's our Yahoo, YouTube channel, youtube.com/AmziAnalytics/videos. Okay. Best thing is to subscribe. There are about 1,400 people there. The moment it's posted, you get a comment. And that's what you want to do. Okay, the systems are up. Okay. This way, sometimes I forget to post it. I mean, I posted, but I forgot to send you guys an email or it's late at night. But this way, you can start looking at it anytime you want. Okay? We try to keep them short, usually about 45 minutes, an hour. And so on and so forth. Now, tomorrow we have, and here's how you join them. These two. One is there for market timing webinar every Wednesday. And then every once in a while, as we change a version, we'll have a open house to introduce the product, which is our flagship product, ORB, Opening Range Breakout. Very unique setup in the marketplace where most of the move comes. And we set up by using a very clever, efficient code system to return in TradeStation. It only runs on TradeStation. We have no interest to port it anywhere else. We don't have the manpower. The issue is not the code. The issue is tech support. And if we don't have a good tech support, I'd rather not have the product. My name is on the door, and my standards are very high. I worked on the F-18 and B-2 bomber. I'm going to keep the standards high. And so if I can't do it a certain way, I won't do it. The cash flow is good. Product is very well received. It's within a year of its, in a week from now, will be 1 year old. And there's a whole write-up on that. The best way to experience it is go through the open house if you like, and we always give you a week or two of live extended test before you buy. There's no reason for you to buy. First thing you see is it for you now. I will warn you, day trading is not for everybody, and within that, system trading is not for most people. You need time, not more money. You gotta give it time for it to work because market texture is constantly changing. If the market texture doesn't change, somebody like me or somebody like, let's say, Monroe can corner the market because we've got the training, we've got the know-how, we have the experience. We'll come and corner. With a little bit extra cash, you'll have so much money that it'll create its own cash. You'll have babies, and you can corner the market. They will never let that happen. There are a lot of people bigger than us here that we could do the same. So they'll never allow market texture to be constant. As such, you gotta have some patience, and we give it in the user guides and so forth. November. For example, last year we made money every month except February. And what happened in February? Oh, Comrade Putin. Yes, he decided to go be stupid and go to Ukraine. So when you see that, the market hasn't seen that, the data hasn't seen that, the parameters haven't seen that. Now, we came back and wrote a patch for it, so it can't happen again. Or if it happens, it would be very, very mild. But that's the realm we are. Once he went away, it was a noise he became noise again. He went to create cash. And that's been our flagship product. I've been very busy with it, and I'm privileged to have a very good team to help me with that. Also, a great system programmer that came from TradeStation. He was one of the VPs there, and part of product management. So he knows literally inside what happens in easy language. And we've known each other some 25, 30 years. From days I ran the user group in LA. And now, we're, 75 minutes away. So we work quite a bit, and we talk every day. We look at a lot of different setups and make sure we're good. We have And we always have a one version or two versions forward in the works. There's 4.7 right now. It's getting ready to go to beta test. And of course, once it's released to our own people, our users, both as running it on their own machines or in the chat room, then we'll invite you to come for that. Right now, we're actually going to talk about 4.6 tomorrow. That's all day. It starts at 8:30. So subscribe to the register to the setup, and you can come in the morning. Okay. Having said that, let's go on to our normal stuff. As you know, we talk about always economic calendar. Then we talk about a couple other charts, and then we go. I'm sorry. Then we go to my proprietary charts, and then I'll take some questions. Okay. Now, Sunday we did a webinar for you. That's again recorded here. This is what I'm talking about. If you go to the channel, this first one. These are chronological order. This was the first one. This, it was posted. Sunday night, wasn't it? Yeah, and then the emailed out Monday morning. We had the wrong econ calendar. Why? It wasn't rolling over yet. It was Sunday. But there's 1 week here, and the 1 week is plenty. Let's see. ISM came in on Monday. Remember, I usually look at the red reports. That's what's crucial to me. Hold on, let's see what we did in ISM. Okay. 53. Consensus was 52.2, and now we got 52.8. So that was a little bit positive for the market. Above 50 is always good. There's a book called How America Reads Its Economic Data. I think that would be advisable for you guys to look at. Econ Calendar creates a chance for us to be actionable time and place in terms of who is disclosing it, what is the impact, and how. And then you look at the what the expectation is versus what the market comes in at, and that's what matters. It's not what you think the market should do. It's what was the expectation and how did the market responded to it. It's purely observation, and you gotta get the tempo of what means. Okay, so MSI, ISM was good. Now, nothing on Tuesday, but of course there's JOLTS. This is job openings. Very crucial. A lot of people look at it. The system here gives it a green rating, which is like medium importance. But and here's the story. Here's the problem. We have these now. Actually, it shrank. We had 11.25 million. These are million jobs openings. Revised up to 11.3 for June. This is the July data. I'm sorry. This is for June coming. So that was the May data. May data got revised up. Consensus was for June. Yeah, there's a delay on reporting. Was to be 11 mil. Range was 11 to 11. We came a little bit lower. So we dipped down a little bit. Okay. The problem here, in my opinion, is some people are not doing what they want to do, so they decide not to do at all, leave it open. The second of it is that I'm not an econ. I'm not an employment guy. I'm not an econ guy. But simply, some of this has to do with the H1 visas. We've got to bring some people in from outside. Look what Canada is doing, where you bring people in. Don't let people in from the southern border. No, there are unskilled workers. Bring people in with PhDs. Bring people in with math and physics degrees. That's what the openings are. Most of the openings are in the Silicon Valley. We can't fill them. Why don't we loosen up a little bit on our visa requirements? World would be a lot better place. Anyhow, but who am I, right? You're lucky I wasn't born here. As usual, Bullard speaks. He had a few chats yesterday. I posted it for you also early this morning, but then he always talks a lot. I've dealt with him a couple of times in person. He's a character. He's the head of San Luis Fed. He used to chat and we come and talk to our club in Chicago, Union League. Maybe because he liked the food. No, actually, it's a very conservative club. And he's a liberal. He's a real dog. But we're a very conservative club in Chicago. Well, probably the oldest city club in the country called Union League. He used to come there often. We had interesting chats. All right. Today was Harker, and I know this morning it could create some pressure. 10:30, right? Hold on, let me take a look here. What was that? I don't remember in the chat room. Everybody was just all over at Harker. Let me see. Yeah, no, actually, we rallied. A little bit after we started talking, we rallied. Yeah. If he was on time. This is 10:30 a.m. Yeah. The low was put in at 945. Although this, you would see the DMZ lines did not cross. We never went to a sell. It just took a lot of fluff out and then resumed again very nicely on the way up. So that was Harker today. No red report. And an OPEC meeting. Factory orders. Let's take a look at that today. I'm doing a build up here going to what the Friday means. Okay. Month to month, 1.6 was prior. This is for June. So that was a May data. May data got revised to 1.8. That's nice. I always like to see that positive. And then consensus was 1.1. Range, it's part of it negative. Up to 2, and we hit 2. Bingo. Very, 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 very nice. The market like that. Okay. That was good. Now, what time was that? 10 a.m. today. What happened on 10? And 10 we started, yeah. And Harker spoke at 10:30. Okay. Let's go to ISM services. I don't look at EIA, by the way. That's oil, but not oil trader. Tico is my dog. He trades crude oil. As you know, he nailed it. He nailed it. Was it February 15th on his feed? He said, I don't know if you don't follow Admiral Tico or not. You should. He says, Daddy, I can see 130 on the crude, on the April crude, because you were February. You already March has settled. 1 month in advance was April crude. He says, I could see 130. Guess what the high was on 24th of February when Putin went in? 13050. The whole 9 pound of it. He was off 50 cents. Okay? Yeah. Remember, 1,000 barrels contract. Crude is 1,000 barrels. You trade, you get a couple of those right. Not that you don't have to work this year. You probably don't have to work for 3 to 5 years. Keep that in mind. Now, don't tell me what I feed them. That's state secret. That's that. You're not gonna get that from me. So. Okay, ISM services 55.3 consensus. Again, this is for July. It's a little bit easier to put together in terms of reports. 51 to 54, 56.7. Another good day. Yeah. Remember, I said our time studies show a July 4th low. We're off by 10 trading days. And when we said that 3 months earlier, it's in the webinar. We'll repeat it too. So, very transparent. We'll show you why we say it to the extent that's plausible and understandable. And of course, this one we got lucky. Yeah, we're not lucky all the time. We make mistakes just like everybody else. Yeah. Anybody who tells you doesn't make mistake, watch out. All right, trade tomorrow, 8:30. Oh, that's going to be nice. Okay, and jobless claims. Well, this is a standard every week, so let's take a look and see what we got there. Okay, initial change 5. Okay, 256. Okay, so we're very much in line with averages. Nothing fancy. Yes. Yeah, this is not March 2020 when we went 20 million. Yeah, oh, that was horrifying experience. Of course, again, Admiral Tico decided on February 12th, those of you on PMT saw that, decided to go short. And everybody and his brother told me that I'm nuts. Not to just that I'm nuts, but also listening to a dog, I'm even more than that. They were right for 3 days. You got to admit. We had 3 ticks, 3 days that ticked above us. It was very nerve-wracking because I covered a lot of longs I had and sold a few rugs, and I gathered my cash and took some of the family cash and put it into a short position, and you don't want to deal with my sister. Yeah. See how Mike knows. Yeah. Like, do you know what you're doing? You're ruining the whole family. I said, hold on. Tico says we got to get short. Come on. By the way, few people know how to spell COVID by then. February 12th, 2020. The rest is history. 5 weeks later, we were 38% lower. 5 weeks. And we said the rollover is going to be on Persian New Year. Spring equinox, March 23rd. I'm sorry, March 20th plus or minus 1 trading day. The low came March 23rd, that Monday. Friday was the New Year, March equinox, which is beginning of the spring renewal. That was the low. I'm sorry, the low. Now the low. I'm sorry, the low print was the following day, but the Dow it said, look at 21.8. Look for 28 test. We're coming for 29,800, almost 30,000. Look for 21.8, which is the low of December 2018. Look at the 18,000 for the election of King Donald, and because they're gonna slap him, boom, 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 boom. That's what the hedge funds will do here. Remember, they're the boss, not the Fed, not the president, not Congress. It's the big money. This is capitalism. The hedge funds are in control. The other one is 14.8, 50% retracement. 3 different levels based on 3 different concepts, non-correlated. Well, we were 2 of them correct. We took 21.8 out like hot knife through butter. 18,000 was printed almost. The Dow futures, because at that time cash was closed, on Sunday night, 22nd of March, was 18086. Go to your charts, you'll see it. That's close enough. You're coming from 29,000 and drop 11,000 to your near price of less than 0.5%. You're there. That's good enough. So again, Admiral Tico got vindicated. And that was the V bottom. Next following day, there was actually a special on Frontline. You got to go and see this. How Chairman Jerome Powell saved the country for what he did on the 23rd of March 2000. And actually, Congress came after that. It took him several days, but he was the one who flooded the market, flooded the zone on that Monday, and that was the low. And we made a V bottom and we went long. As a matter of fact, if you look at our charts, which we publish regularly, hold on. Right here, this was just updated today. This is that low. Down hit 18,000. Guess what? We reverted. So we were short, we were gaining, market was dropping. It reversed, and we reversed too. Because we said when it's going to reverse. So that was the massive separation of this delta. This is what the system has made, cash on cash, versus what the market has done, if you assume buy and hope. Now, the values are posted based on change of biases. So it's not a continuous price of the S&P, because we could go sideways or sit out. Okay? But this is what we have done. This is before any options. This is just cash on cash versus what the S&P is on cash on cash. And that's why we have this dispersion, which is about 83% over since, let's say, January 15th, 2015. That's how we've arrived here. So that's why, you use some of that timing. Of course, I'm privileged to have Admiral Tico help me on these. International trade, that's tomorrow. Also at 8:30. Balance was 85, consensus 81.9, and of course we don't know what the actual is going to be. They're going to add this. Remember, depending where this is coming from, whoever publishes this for us, I don't know. I'm trying to see who it is. I can't tell. That website is going to be very down, including this one too. Accommodate. You're going to have to be patient when you look it up. That's for next tomorrow, and then you got the granddaddy of all on Friday. Oh, Tom Barkin speaking. Who the hell is he now? I forgot. I kept a note here somewhere. Murray. Sorry, guys. There we go. Oh, Barkin. Tom Barkin. Tom Barkin is Richmond. Okay. Hello, Richmond's going to talk. All right. That's on Friday at 8. Oh, lovely. Right before the number. Here's the number. The biggest day of the market. We will not do open house on that day. Not these days. Just way too much. And if you're new coming in, you can get decimated. That's not our intent. Okay. By the way, with the new system, because it uses the continuous pricing, it is possible for us to trade this. We're looking into that. Yeah. So I usually trade manually, and I've missed. I'm sorry. I got to choose my words carefully. I have not been present to trade non-farm probably less than number of fingers in my hand over the last 25 years. Okay. Now, have I missed some? Sure. Have I made mistakes? Sure. Have I got fried a couple of times? Sure. Because it moves so fast. It's fire in your hand. So occasionally you're going to burn your hand. You got to be very, very careful. and you got to pick your spots, and then you say to yourself, when is enough is enough. You made X, that's fine, get out. Why? The next trade could take that back out and then some. It comes in waves and usually dies within 15 to 20 minutes. You don't want to jump in ahead of a number. I don't believe in having any opinions. I've seen a lot of people, a lot smarter than me, a lot better cash equipped with than me, bigger accounts, got wiped out. So don't go there. Wait the number to come out. As one key S&P trader in CME pits always would say, wait to at least 2 reactions, then go in for the third. So patience is important. If you're not patient in the morning, I know a few of you right now, I can tell from the names who you guys are. Won't mention any names or faces. But if you're not patient, that's the day that you could be sent into guillotine. Yeah, so be careful. 370. Why I say we have any thunderstorms coming? If you lose the internet, we have lost the internet, so you know. 372. Although we have backups and all that, but you know. 372 for non-farm. That's a headline number. I tend to go deeper. I tend to go to BLS.gov and look at it as soon as I can get in. Remember, you know how many people are dialing to BLS.gov to see this? Yeah. Get the full report, and you want to be able to look at, for example, I want to get some detail on manufacturing parts. I want housing. I want auto. Whatever breakdown I can get there. I do look at average work week right from here. It hardly moves, but always significant if it does. Private payers are important. Now, where is what happened to ADP? Hold on. Sure, we have ADP today. What happened to ADP? No ADP today? What happened? Anybody knows? That should give you a preview. There's a job cut tomorrow. That's the Challenger. No, not that. But I don't see ADP here. Interesting. ADP used to have a good correlation before. You know, most times. There were some exceptions. But okay. I don't care about unemployment rate. That's again the headline. Headlines for PR. People up front who don't dig in. Yeah, it's just not there. 372, 250, 223. Now, question is, are we gonna have a recession? Right there tells you no. Right there tells you no. If these numbers hold, what kind of recession is this? Okay, no. You know, so be careful what kind of a BS they're teaching you, they're feeding you. You gotta filter it, okay? And you gotta ask yourself why. You gotta ask questions. Don't let anybody tell you what to do. Be on the lookout and say, I've got a brain, I'm gonna put it to work, I need to know why. And dig in. There's a lot of data out there. I don't believe it that we're gonna have a recession like this. Could we have a soft landing? We could. Could we have other problems? Let's say Taiwan, yes. But that's a different dimension, not here. One of the key things I want to look at, make sure manufacturing and housing. Those 2 data to add up. Now, housing is going to be a little bit difficult. Why? I'll show you the chart. It's called term structure of interest rates. I've been pounding a table saying that, guys, we're going to get into trouble, especially a number of hot-headed people down here in Southwest Florida thinking that, yeah, we're just going to go up in prices, and we haven't. So if the sales are not good, if the mortgage applications are not there, startups are going to slow down, permits going to slow down. So, and then obviously the employment of that sector is going to drop. So these are the things you want to look at and think about. And you don't need to have a PhD in economics from Harvard or Princeton or anywhere else, or Stanford for that matter. Any good school will teach you a lot about economics, but common sense always rules, and just gotta sit down and ask yourself, does it all make sense or not? As you know, Admiral Tico posted this as chart of a day for himself on his feed, Admiral at Admiral _TIKO, Tango India Kilo Oscar, and this was a historic chart. Why? Well, first of all, as you know, in this is, I believe this is March. Yeah, March was huge, and then so was the June. Incredible. Okay, and now, but look at this run on the front end of the curve. Remember, this is a 91-day discount rate, so you have to actually churn it 4 times to get a equivalent bond yield. These are annual YTMs, yield to maturities. I'm sorry, I'm a student of Richard Roll, and we use Fabuzzi as his book. Roll was the guy who did the payoff curve on proprietary payoff curve for Goldman on all mortgages that you do refinance. If you've done refinance in your life, you paid my professor. You send him a few basis points. He's got a patent on that, the payoff curve. So I was his student. I was privileged to be a student. And believe me, I understood part of a course. He's too smart. He's way too smart. Richard Roll. Actually, if you go to my website, not sure, it's not plugged for me, it's actually plugged for my professors. If you go to my website here, and there you go. Go to about, you can read about it. Roll should be somewhere in here. Yeah, it was, there we go, Richard Roll. Incredible guy, absolutely incredible guy. Anyhow, the lesson here is we're in a very, very changing phenomenon. Where he told us when we were way up there on the top, to the levels, okay? He says, Farry, we're going to go, this is 95, 96. We're going to go to, by turn of the century, to levels we haven't seen before. Near zero. I'm scratching my head. What the hell does he know? Guess what? We're down there. It's called 9/11. He didn't know anything about 9/11. Never wished anything wrong for the country. No. But he just felt that slowly we're going to come down and we're going to be probably pinned. We're going to be leveled off at low level. Now, twice we have done that. We also did it in 2008, and then we did it in 2020. That's what creates this inflation. By getting people lazy and giving them cheap, free money, two places going to go, housing and stock market. And so that's where the problem is. And now we have this inflation. Hold on 1 second. I want to make sure we're good. Hold on, I have a connection issue. 1 second. Not with you guys, no, on the system itself. Okay, anyhow. So, type of structure of interest rates. So that's what tells you why I think that it's what am I trying to say? The real estate exposure and real estate manufacturing, building component of non-farm is crucial to watch. And it's a confirmation of whether what kind of forward view we have real estate wise. Remember, the economy is two parts. I've always said that. Two parts. This country's got two parts of the economy: cars, automobiles, and housing. We're in love with both of them. The economy is not building B-2 bombers. The economy is this stuff. Why? Because it's a part of need. Average need is to be satisfied. So these two, if you watch those two, you get a pretty good sense of the core of the economy: housing and automobiles. 1 second, somebody else is it? Yeah, okay. It's look at the alarm here, so sensitive. All right. Having said that, let's go to our charts. So we're done with the economic calendar for this week. As you know, we're trying to build, by the way, a forward view of this. One of the guys is helping me. He wanted to be a mentor. I mean, not a mentor, intern. I said, fine. But it's not going to be easy. And he goes, I don't care. I just want to hang out and learn. I said, fine, whatever it takes. If you're willing to do whatever it takes, I'll give you some jobs. Some things to do. The problem is I'm not easy. And this stuff is not easy. And you have to excel. So far, he has. So far, he's really worked hard. So we shall see. I did also tell him, be careful what you wish for. So. Okay, charts. Let's go to charts. Now, guys, hold on. Do I have anything here? I didn't bring water. Oh, there's a little Diet Coke. Remember, I've stopped smoking, so I got a lot of reactions. I mean, I've cut back dramatically. Not zero, but anyhow. Post-COVID. Yeah, I had COVID on July 3rd. I was detected, and then I had a relapse the moment I got to LA. I mean, back to Florida. Sorry, back to Florida. So I had all the symptoms, and then one of my tests were null and void. I retook it, and it came out negative. I don't know if it's correct or not. These are PCR tests. You can use, by the way, you can't use antigen. Antigen is, but it's cheap, so it's biased towards telling you have it. And government wants you to take the worst case and go and isolate yourself. So, but it's not good to tell you don't have it. For that, you got to use PCR, and I use a lab of a friend of mine in LA to make sure I have it, even though I had all the symptoms. I was already on Plaxeville, and then took 2 more in LA before I decided, it's safe to post that graph. Of course, I have a very specialized mask, like it's a fighter pilot mask with 5 layers of filter. Still, I got it. You can imagine how this BA variant is, BA5 variant is of Omicron. It is very nasty. But if you're vaccinated, I think the chance of getting hospitalized is very low. Just you got to watch your oxygen. That's very key. Your oxygen saturation is key. Pulse oximeter is about $40 on Amazon. Best thing you could do. And smart as I am, I forgot to take it with me. So, yeah. Now it's with me. I'm just always carry it constantly. So, all right, market time. So we said, hey guys, we're expecting a July 4th low. Well, the low came in mid-June, so we're off. Here's July 4th. Okay. And did a retest. And boom. There was no retest of this. The retest of July 4th was here, which is July 14th, about a week later. And we rallied up. And chips led. We bought Amazon here at 100. It's 140 today, as I was told. And one of them is my my dental hygienist. So I get very good treatment. It traded at 140.50, not too shabby. Okay, we did some options on it. We bought this stock first. We did not buy the option first in the stock. That's front running. We'll never do that. We don't need to. People who do that belong to the gutter, not us. And I will never risk the website for that. So that's the next example. We're also in NVIDIA. We're in a bunch of names. Nancy Scott, who's here, she's been very, very helpful to me. Of course, an avid option trader, and she can do stuff with her eyes closed. So I'm privileged to work with her. And we just put another trade on now. We'll have 3 more in the morning. This is our option package. It's full blown. It didn't slow down because I slowed down on the system. And we just have to update our results for you guys to know. But those who are members, solid. They don't budge. They don't care. They're there because they know even if we take a pause, we have a reason. Part of it is this: we will never do forced trades. Never do forced trade. What time is it? 5:42. Okay. All right. Forced trades is when you overtrade and then get into a mistake, and then you add to that problem. You can't do forced trades. You could only kill your account. Where are we now? Well, we were below center line, oscillate back and forth, went to 3 sigma, almost 2 days in a row. Low was made, but we shifted to the right. If you read any of Bollinger stuff, which is the subset of sigma channels, you will find out that when you separate from the Bollinger levels, now he's doing 2 sigma. I like to use -2 and +2. I like to use 3, and in case of VIX, I like to use the 4th one, which is a dash. So I always have a thick one for the 3rd, dash one for the 4th. This way I know visually where I am, mentally, under the heat of the battle. You have to separate. When you separate from the line, you begin to base. Again, boom, 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 pulls up. Failure at the central line, understood. Pulls back, but it doesn't even go below -1. Remember, -1, -2 is like here. We're dropping. This is crucial, guys. Take note. -1, -2. I know a fellow wrote to me, he says, the day you taught me this changed my life. I said, oh, I'm glad to know that. And when was this? It was a few years ago. So much better. Same thing happened on the other side. +1, +2. We're in that range now. At this one, we sold. We're going to buy. Why? 43.40. Ani, you were looking for that, right? Right? middle of futures trading. He or she wants to know. Where are we going? Well, we're going to go to 200 day. Now, are we going to go above it? That I don't know. I didn't get that email yet. Nobody knows. Okay, yeah. You get all kinds of people making comments, all that. The reality is nobody knows. And so I have to qualify it and say, listen, the day I tell you I know, I want you to run away from me. Don't hang out. I've gone senile. Run away. Yeah. I'm beyond help. Nobody knows. So, okay, 1/4 All right. So, one way is that somewhere around 3 sigma, as we near 200 day, that's what we're going to look at. This is 50. It was crucial to go above 50. Notice we revved up here. Why? It makes sense. I said that, guys. This is a logical place to get a bounce that we did. Go through 50, still above 20. Remember, 0.6 is 20. Come back down, retest, and go. And you're in the channel, +1, +2. As long as we stay in the channel, it's Goldilocks. Not too fast, not too slow. We're going to go up. If you go up too fast, we're done. If we drop too fast, we're done. See that? This scared a lot of you guys. I know that. I was here. What did I say? Good. Give me the flush I'm looking for. And did I get a flush? Look at the volume ratio. History repeats itself. You just have to know what to look for. Just have good indicators, have a cool head, and do a synthesis in your head. What does it all mean? Okay, we're a little bit overbought, no question. But we can go off the wall of worry for a while. Yeah. Until all the shorts are completely killed. Then the long, and then the naysayers who are waiting for market to go up to be convinced they got to go up, they jump in, and that's the end. The moment they jump in, we're going to turn and take it down. Why? Gecko said it. We make famines. We make the wars. That's the business we're in. We're not here to hand out any free money. Yeah, sometimes we get guilty and we have foundations and give out food and this and that, but that's a cover. We've got to go in and startle you, to wake you up and teach you a lesson when you really felt comfortable. Look, you know what happened yesterday. Robinhood, 23%. That's a quarter of manpower they cut off. They're in trouble. 2 years ago, that was the only game in town. And why? Because 25 million people came in with the PPP money, never traded before. Fresh money came in into the market and real estate. Two groups, real estate and market, 25 mil. People. You think what's going to happen to them? We take them down here. It's the woodshed right here. We'll teach them a lesson they'll never forget. So, all right. Look at CIs. We're going up there. We're red. We're up there. So we're slowly getting up there. Look at Breadth Trust. This has been one of the beautiful, magnificent Breadth Trusts we've had. Why? We usually don't go above 60. I'm sorry, 65. Yeah. So what did we hit here? 68. Now, I often talk about these in the chat room, just when we have things that slow down and get a perspective. But it's not. This is a separate package. But this is what we were here. Okay, canaries in a coal mine. We're not going to go anywhere. That's interesting move there, by the way, yesterday. Without Transpedition being offering a support for SPX and Russell supporting NDX. Okay, so far so good here, not a problem. And remember, this is the 100 best companies in the U.S. If these get into trouble, we're done. And this should lead SPX. Those are the structures we're looking for. If the structure is broken, that's a signal. Okay. And transportation, this was a huge drop yesterday. Huge, of course, everything pulled back yesterday. Yeah, but this was a huge drop. But guess what it is? In the channel. Murray. Hold on. In the channel. +1, +2. Not too close. You got a little bit too close, it pulled back. But look where the bounce is from. It's a music sheet. Think of it this way. It's a ballet in the middle of a chaos. You just gotta know where to look. Or talk to Tico, one of the two. Yeah. Right, boo boo? Okay, D-trenders. Okay. We start talking about this Sunday. The count is changing. Okay? We had 4 and 4 now. Soon it's gonna be 5-3, 6-2, 7-1, 8-0, we're gonna be in trouble from the other side. Because down here we was negative. Down here we were negative 8-0. We were down here. Somewhere in here, that's what we're doing. Yeah. When that low happened, it was -8. Everything was negative. Once we get that area, then we're going to return. What's a detrender? Is a price difference. I'm saying percentage of the price between current price and the current 50 bar on 200 bar. So this one is positive because we're above it. This one is negative because we're below it. And that's because we're in between. And as you know, we could be above both or could be below both. So that's what creates these patterns. You got to think about it, look at it, and see. Often you see how they have a synthesis with each other. The more mechanical, large portfolio managers, they use these trenders, yeah. And how do they do it? They do it like this. They bring it back and say, over a long period of time, where these levels were, what was that percentage is, what's this percentage is. And so they keep track of those. And we do the same thing in our report. We use 5 years or 7 years of historical data to show where that be. Okay? Okay. First item of interest. This is the 52 weeks high and low for S&P. High and lows. Very low, so we should be going up. And was very high here. We should be going down. We went down. We're building the bottom to come back. And while we went down, these peaked. So they are self-correcting. They oscillate. Very, very simple. Nothing fancy. SP1 Momo, a friend of mine said, is there any way I can have this? The answer is no. I don't have a friend that good to deserve this. This is our stuff. This is internal. I'm more than happy to share it with you. I'm more happy to post a chart and analyze it, but you're not going to have the code. No, I'm sorry. And so whoever that was, don't take it personal. He's not even here today. But you may hear the recording. This has to do with the internals of S&P 500, and it's his younger brethren. Why do we need two? Because we want to use one as a oscillator for a bullish divergence. And as I said, we went too far here, and we should pull back. We did. We didn't pull back. But look what we're doing. We're above it now, and this has gone up. What this hasn't. You see the difference? It's a scoring issue. You score it. So it's 70% of what it's supposed to be, but here's a new high. Now this is a meaningless scale because we want to scramble what this data is. We have no interest to show what this data is. All we know is it works. And how you need to look at it is where is it against the sigma channels. So we're up there. We have not peaked yet, but we're close. This is setting up a surprise. I think we're not that far from a pullback. So what do you do if you don't buy Amazon at 100? Gee, you should hang around in the chat room. That's the price. I declare everything. Yeah, it's a Reg D, Reg FT. I'm sorry, Reg FT. Full disclosure. It's full disclosure. Hey, am I buying this option? Hey, we have our existing positions. If there's none, there's none. So, but that's part of what we do. Okay, we are losing connectivity. 1 second, please. We have an issue. I can tell. We have a problem. This could be an issue. Hold on 1 second. Let me check it. I was right. We were losing internet. There's an advanced, it's an advanced system called TV. If the TV gets into trouble, you know you're about to lose the internet. Yeah. All right, guys. So we're good. We're good. Remember, we're having a thunderstorm. All right, we're good now. So here's the problem. Make sure we have the audio. We open the volume so we know it's coming back. Okay, good. All right, so I talked about yesterday. Who was that? Stay here. Don't go anywhere. He's scared of this stuff. Okay, let's open this up for a moment, guys. And very concentrate. Like Mark is opening in 5 minutes. Okay. I talked about what's happening with the SQ. This is S&P tail risk. There's a white paper on that. It's on the website. You can read it. What's happening here is that we're going up, and there are no new bets on the downside. You lost audio. Is the audio down? Can you guys hear me okay? Okay. Audio, video. Can we check audio, video? Okay, hold on. Got me go. Okay, audio check. Hold on. 1 second, guys. Let me see. Audio check. Can you guys hear me okay? Audio check. No audio for anybody? Okay. No audio. What time is that? 3:55. Okay. Well, guys, if I got to reboot. But if I reboot, I don't know what's going to happen to the recording. We're going to have probably in 2 pieces. Oh, let me come back. Hold on. Be right back. Okay, I'm going to come